Yeah. That's cool, you know?
Okay, cool. Does this work for the people online? Thank you. Can you check if you get feedback if we can hear it? Awesome, thank you. Because it doesn't really work with my phone. So I feel like I've been doing this for the nth time by now, and every single time I face a new technical issue. So maybe at one point I know all of them. If you can check if the people online can actually see the presenter view, or if they can wait. This did not make sense. I'll be sharing this screen. Okay. Perfect. You saved yourself a sandwich.
Yeah.
Yeah, so this is fun. Let me just figure it out one more second.
No worries. It's very informal, so we'll try and keep it to under 20 minutes and
Here we go.
leave it
Okay.
up to you.
Online, can they see the
Oh, are we
slides?
online as well?
Yes, it's hybrid. So this
okay.
is, I'm hoping to kind of like get rid of the hybrid format because it's just more
Of
Yeah.
course.
more tech issues that I can run into that I'm not a fan of. So Debbie, my colleague, actually initiated this session. Unfortunately, she's out sick at the moment, so I'm just super quickly going to introduce our guests today, and then I'll leave it up to them to further introduce themselves. So we have from Launch Africa Ventures, we have Zach, Margaret, and
Janade.
Say again.
Janade.
Janade. Okay, I'm so sorry.
Janade, if you're
Janade.
Janade.
if you're
That's how you originally pronounce it?
Yeah.
Okay, Janade. So that's easier for me. Perfect. Okay, so I'll hand the word to you guys. If we have any questions online, yes.
I will take it for in a moment. But
Perfect. Yeah, if there are any questions online, feel free to type them in the chat and we will ask them.
do I have to be here from a camera perspective?
From a camera perspective, yes, because it's my laptop camera.
Okay.
And
Okay.
is it turned on? The clicker? No.
No, it's not.
Other side?
Oh, sweet.
Yeah,
Okay.
here we go.
Fantastic. So just when we do these sort of presentations, we just want to get a sense of who's in the audience. So that most of you founders, investors, work at corporate. The fact that you're at F10 obviously means that you do care about startups, I'm assuming. So yeah, just one by one, what do you guys do?
I work in a startup, Empower, as business development.
Cool. What does Empower do? Just for the sake of everyone, I think I know what Empower
Okay, we do electrification of small and medium-sized products in different countries in Africa.
Yeah, same. I'm a colleague of Maria. Senior.
Awesome.
I was in Namibia for 1.5 years and now Zurich for partnerships.
Nice.
Mano.
I'm founder, same company.
Sure.
Alright, so I'm Victoria, I'm the founder of HR Tech Ventures, and we do HR consulting and HR technology. And I was one of the venture leaders with Venture Labs to South Africa in 2020.
Oh yeah, I remember
And so
that.
hence the interest in your presentation today.
Venture Labs, yes.
my name is Marina, and I'm part of the investment team here at F10, so the VC part.
Nice.
Peter, I'm in between working for F10 as well as Plessis.
As well as what, sorry?
For 6.
Oh, for 6, yes.
Stock exchange, so between startup.
Nice.
My name is David. I'm co-founder of an investment company, and we look for opportunities.
In Switzerland, I mean, in
All
textile.
over the world.
Okay, what's your investment company called?
We don't know. It's in the US and in Switzerland as well. FSP called.
Okay, cool.
Hello, my name is Rita and I work on innovation at SIX.
Nice.
Hi, my name is Nadia. I'm also working for SIX and I'm in the same team as Rita.
Awesome. Lovely.
Hi, I'm Elena. I work in a large corporate company on partnerships, but mainly large partnerships. But we do also a lot of innovation work, including also smaller companies, startups, and also from personal standpoint.
Amazing. So,
Hi, my name is Miola. I'm working back there, and this morning I saw this sign about the event, so I thought it's going to be cool. So
amazing.
I'm here.
We have a lot of those.
Thank you.
Awesome. Thank you for coming.
Thank you.
And your colleague.
She is one of my
I'm Magdalena and I work for F10 and I'm managing the incubation program.
Cool. Awesome.
and my tech support.
Come on, Gathers.
Everyone needs a good tech support. Maybe Janade, Margaret, you want to say a couple of words of yourselves and I'll.
Sure. Hi, I'm Margaret. I am a London-based chairperson of Launch Africa Venture Fund. I'm a former tech founder that started, scaled, and sold the business from New York. And I passed MasterCard corporate exec, having set up the business in Asia and global tech partnerships. So I relate to a lot of people there. And we had the most interesting conversation about innovation in SME insurance. And Launch Africa has invested in a lot of SME finance-related companies, and this is a potential area for future innovation in Africa as well as the rest of the world.
Amazing.
I'm Janade. I'm Zach's co-GP at Launch Africa from South Africa. I'm just the boring finance guy at the end of the day. This is my fourth fund. I've created an impact fund many years ago, investing in women in rural areas on the African continent. Very strong about gender lens investing. I ran a corporate VC fund for one of the South African banks. I worked at a development finance institution where I created many funds, and now doing this with Launch Africa, really adding value to prove where capital can go and be successful and riskier assets. Because we know that once you have one example, two examples, many other investors will follow. There's a lot of FOMO in our industry. And we've just recently launched a gender lens fund, investing in female founders in Africa, as a sister fund to Launch Africa. And it's a real honor to see so many females in the audience today.
By show of hands, how many of you have lived in Africa, have visited any? I mean, there was one from Namibia here, but anyone done work on the African continent or interacted with Africa? Quite a lot, wow. Cool, okay, so we'll try and keep this pretty compact in the next 20 minutes and talk to you about what's currently happening on the African continent, how the VC industry has evolved, but also a bit of the macroeconomic picture of the investing climate in Africa and the startup culture there. So this is something that a lot of people talk about, but when you look at the numbers, it's actually quite significant. So today, Africa has about 1.4 billion people. So if you look at Africa as an economic bloc, it's similar to India and China, even though we have 54 countries. From a scaling perspective for a startup, Africa is a block similar to India and China. But what's different about Africa is its growth. So in the next 60 to 70 years, Africa is expected to account for nearly 1 in 3 people on the planet. Right? If you look at a country like Nigeria, for example, Nigeria has, if it's hard for you guys to see, you can always come.
Okay. Sorry.
Yeah. Nigeria, for example, is geographically the size of Texas. but Nigeria has a population of, can anyone guess what Nigeria's population is?
200 million.
Close, but it's actually higher. It's close to 220 million people, right? And it's the size of Texas. And the entire adult population in the US is about 250 million people, adult population, right? And Nigeria is growing probably quicker than any US major region. Similar thing with cities like with Lagos, well, Kinshasa, Nairobi, Accra. So from a population standpoint, Africa is the world's youngest continent. The average age of the median African individual is 19. Janade corrects me here. And in Europe, it's 44,
44
and it's 46.
44 in the US.
Yeah. So from a employment perspective, from an infrastructure perspective, a very young population growing very quickly is either an infrastructural challenge or it's a huge opportunity, whichever way you look at it, right? And the only way you can solve these problems in food, water security, housing, education, healthcare is not by building more assets, which is what the world has done for the last 4 or 5 decades post World War II, but it's by using technology to create more of a sharing economy. And that's one of the reasons why Africa has leapfrogged many other parts of the world in things like mobile infrastructure, fintech, insurtech. So the next 60 years, with an exponentially quickly growing population, up until about 4 or 5 years ago, a lot of investors ignored Africa for one main reason. It's because even though we have a very fast growing population, the purchasing power and the economic activity of these 1.4 billion individuals didn't compare to the opportunities in, for example, Europe, North America, and in Asia. But what we've seen in the last 7 to 8 years is the purchasing power of consumers has gone up dramatically. The cost of data has dropped significantly. So, for example, as little as 7 to 8 years ago, it cost between $25 and $30 for 1 gigabyte of data across Africa, averages. And now it costs less than $5. So all of a sudden you have hundreds of millions of people that are economically active through their smartphones. The percentage of people that were online was less than 2% when I came to Africa 10 years ago. And now it's late teens, almost 20%. So all these factors, why am I telling you all this? It's because investors need to look at returns are obviously very important, the impact's important, but ultimately you can't ignore the fact that you've got hundreds of millions of people that need to be provided goods and services. And one of the only efficient ways of doing that is through venture capital, right? When governments and large corporates haven't been able to prove that impact. For those of you that are familiar with the global VC industry, some numbers you might find fascinating. So again, Africa will account for about 1 in 3 people, a third of the world's population. Africa right now accounts for about between 9 and 10% of the world's GDP, but less than 1% of the world's venture capital. So there's this massive arbitrage between population, GDP, and venture. Right? I'm an ex-banker, so I love arbitrage. But there's an arbitrage in venture, not just from an amount perspective, but also from a valuation standpoint, right? So investing into early stage startups on the African continent, tech startups, and backing the right winners gives you on day one between 40 to 60% arbitrage from a valuation perspective. And that's something I'll talk about in a few minutes. But in terms of numbers, 10 years ago, there was about $5 million in venture across the whole continent of Africa. All right, let's just let that sink in for a second.
5 million.
That's it. Yeah. I mean, not that Switzerland was too much better 10 years ago. Let's just be honest here, guys. Switzerland was pretty bleak from a VC perspective in 2010. I bet most people didn't even know what venture capital was in 2010. But this is 54 countries in Africa, right? So it was pretty much non-existent, right? And last year we had between 5 and 6 billion, depending on the sources you look at, of VC. So from 5 million to 5 billion in less than 10 years, right? That's 1,000x. And a large part of that is because corporates on the African continent. So I'm glad that Six is here so you'd understand the insurance and financial perspective here. A lot of insurance companies and banks on the African continent realized as little as 5 years ago that if they don't work with startups, they're going to be obsolete, right? And fintech and insurtech is not just payments and helping people get insurance faster, quicker, cheaper. It extends into a myriad of things, into credit, into lending, into insurance, into savings, into asset management. Every aspect of how we pay and get paid and transact with money is disrupted by fintechs. You don't need me to explain that to you, but from a numbers perspective, fintech is by far the most dominant of all the sectors in Africa that receive VC funding. So the size has increased dramatically in the last 10 years, the highest in the world from a growth perspective, but also the size of rounds, the number of rounds, and the number of investors investing. You can read all this here. I'm just talking over it so you're not double hearing it. Has increased, right? So last year alone, we had more than 800 global funds invest in African tech, right? That's a significant increase from what it was as little as 3 or 4 years ago. I'm not actually, how many unicorns does Switzerland currently have? Does anyone know?
We have one soonicorn in the portfolio.
Is that your company?
No. But we've invested from.
Oh, nice.
Part of the story. Yeah.
Oh, fantastic. Well done. So 2 years ago, Africa had 0 unicorns, right? And today we're sitting at 11. And by the end of this year, we reckon it'll be close to 15 unicorns. And what's interesting is about 60% of these are in fintech, but we've had 2 mobility logistics unicorns and edtech unicorns. What you will realize, maybe we'll talk a little, some of these points are about things I mentioned earlier, the percentage of individuals using the internet, the percentage on mobile networks. Speaking of smartphones, the three of us were at a conference last week in Amsterdam where we heard this really cool statistic about in 2005, was it 2000 in New York?
20 years ago.
20 years ago, there were more cell phones in New York City, where I lived for many years, than the whole of Africa, in New York City alone. And today there are more phones in Africa, smartphones, than the whole of the US.
2 to 3 times.
2 to 3 times more. Right? So just from a context perspective, the power that a phone has is absolutely crazy. The 4 major economies in Africa from an innovation and VC standpoint are Egypt, South Africa, Nigeria, and Kenya. These 4 countries together make up more than half of the continent's GDP. Right? You could compare them in Europe to the 4 largest economies from a tech perspective, and that would be Germany, France. I would imagine, the UK, if you still consider UK part of Europe, and possibly I would imagine Switzerland, but I would imagine it's and the Netherlands, the Nordics, I suppose as well, but. From an African perspective, you've got 4 or 5 major countries that dominate from a VC perspective. I'll skip through some of these. What's interesting here is because the consumer purchasing power has really increased, the last 2 years of COVID really accelerated the adoption of digital services, and that spread across education, healthcare. People were forced to go digital. And you saw a lot of insurers, banks, and telcos really understand that if they wanted to be relevant, they had to work with startups. I'll talk about the emergence of accelerator programs in a second. By 2050, so less than 30 years from now, Africa is expected to be home to 1.6 billion working age adults and 1/3 of the world's young people. Again, we'll send these slides to you so you've got these in context. From a developer perspective, this is something you may not be aware of. A huge percentage of the developers in global tech startups are now starting to come from cities like Lagos, Nairobi, Accra, Kampala. In fact, one of the first unicorns in Africa was a startup called Adela, which is about 7 years old now. They were seed funded by Zuckerberg, and then their future rounds were led by, again, the Zuckerberg Chan Foundation, as well as Generations, which is Al Gore's VC fund. They now power several of the top tech startups in Silicon Valley. So Africa has, but specifically Nigeria, Kenya, and East Africa have become a hub for top developer talent, software engineers and architects, and designers, graphic designers and web designers. And that is spurring a change in the attitude towards what young graduates do post their degrees in engineering, science, etc. So whereas, I'll talk about this a bit later, but when cities see a change in the way young people or what they do post-university, you start creating innovation within an ecosystem. So, and we see this in multiple, in fact, I'll skip to that slide right now itself. Maybe I'll talk about it later. Even within a specific country, have you ever wondered why, for example, in Germany, Berlin has so many more successful tech entrepreneurs versus Frankfurt? It's the same country. Why does San Francisco have more, not just unicorns, but successful founders than, for example, LA? It's because of the attitude towards risk, the attitude towards risk-return trade-offs. And in South Africa, for example, Cape Town plays that role versus Johannesburg, which is a financial capital. So as founders, if you're looking to scale into multiple regions in the world, or at least within your continent, you got to be aware of where your biggest customers are going to come from. Because ultimately, one of the issues that a lot of European startups have is their ability to scale into different European countries. So if you're a fintech in, let's say, in Amsterdam, and you're working with Rabobank or ABN AMRO, it's very hard for you to start working with SocGen or BNP. It's just different cultures, different languages, very hard to scale within Europe. In Africa, it's the opposite. It's easier to scale in Africa, even though you've got 54 countries, because most of the distribution channels are B2B. So if you have a pilot with a large bank like Standard Bank or Barclays Africa, the way the OpCo-HoldCo structures are set up is a lot more homogeneous than in, for example, Europe. Also, Africa has only 3 major business languages, which is English, French, and Arabic. So you can scale a lot quicker within Africa than you can in Europe, right? The same thing in Southeast Asia. So, which is why I'll show a slide a bit later on. Actually, I'll do it right now. There's a slide here that talks about the time that it takes for African startups to become unicorns. It's between sort of 3 to 6 years. And it's all about how many customers you can acquire and at what cost. So if you're able to be live in 6 or 7 or 8 countries within the first 3 to 4 years of your operation, you've got massive scale. You don't spend a lot of money in cross-border expansion that you would do in Europe. It suddenly becomes very attractive to VCs and investors to be investing in African tech startups. The other thing that most of you may not know is the majority of African tech startups have their holding companies and their IP outside of Africa. In the US predominantly, some in the UK, some in the Netherlands and Singapore. right? But they have these very simple structures where the holdco and the IP sits overseas, and the holdco owns multiple operating subsidiaries. And most funds on the continent and globally invest at the holdco where the IP is. And from a repatriation of funds perspective, there's minimal, I wouldn't say zero, there's minimal exchange rate risk and geopolitical risk.
So sorry, this is I think a very, very interesting point actually, because how is it done on the very early stage segment? I believe that most founders actually found and register their company in their home country. And then, I mean, when is the time that they have Delaware?
Yeah. So doing a Delaware flip is encouraged very early on, preferably before you start generating revenue. And this is where accelerators are very helpful. So, oh gosh, I didn't even talk about what I do. So, but brief back when I started the first accelerator in Africa, Barclays Techstars, and then I started Startup Bootcamp in Africa, which I'm sure you guys know Startup Bootcamp. It's a pretty global accelerator. So if you get into an accelerator, one of the prerequisites before demo days, if you haven't flipped not just your opco holdco, but also your IP, you likely won't graduate from an accelerator. So it's almost a prerequisite.
And is there probably a trend emerging that more and more companies stay in their home, startups stay in their home country instead of flipping to a
So just, I think to be very clear, nothing changes operationally.
Yeah, that's clear.
All the revenue is made in Kenya, Nigeria, South Africa. It's purely a structuring agreement.
But you don't kind of observe there's a different trend now, putting the structure not in an overseas company, but keeping it locally.
No, it's very rare.
Maybe just in South Africa.
Maybe in South Africa. Yeah, it's extremely rare.
So in our portfolio of 116 companies, I would say it's only the South African and maybe two Mauritian companies. So about 20, South Africans are also
quite a few of them that are flipping.
So I would say between 10 and 12 companies of 116.
Out of 116, yeah, it's very rare. Unless you're not looking for venture funding.
Do you have any LPs in your fund which are based in Africa?
Yeah, about 20 to 25% of our LPs are African, yeah. We've got a lot of LPs in our fund. We've got 238 LPs in our fund, which is quite a lot. But it's also because we've truly democratized access to VC, which very few funds have been able to do. Most VC funds, not just in Africa, but in Europe and the US, limit your investors to accredited family offices, individuals, or institutional investors, right? So we strongly believe that if the only options to invest in innovation for individuals that are not millionaires, right, literally, is investing in listed equities or buying property, that's not cool. Right? I mean, I certainly don't have $1 million lying around in my back pocket, but a lot of funds, especially in emerging markets, understand that especially young people, millennials, and up and coming Gen Zs want to have access to support fellow innovative entrepreneurs across the world. So VC funds have been forced to become more innovative and change their structures to allow it. So our current fund in Mauritius has the ability for anyone, as long as you pass basic KYC and anti-money laundering requirements, to invest in our fund. So we've got investors in Fund 1, which closed recently, for as little as $25,000.
And how do you structure it? By an SPV or?
No, so it's called a collective investment scheme, PCIS. It's in Mauritius. It's used by several global private equity and VC funds. But we were one of the first ones doing it for early stage VC. And every investor is technically not an LP, they're a shareholder. So they have LP GP waterfall structures from a distribution perspective, but they have the structure of a shareholder. So, yeah, I mean, so you invest $25,000 in a $25 million fund, you own 0.1% of company shares. That's one of the advantages of. I believe the Netherlands also has a similar structure, but yeah, I mean, Mauritius just made sense for us because
So Mauritius is a go-to place in Africa.
Mauritius is, for pretty much all practical purposes, the Cayman of Africa or the Luxembourg of Africa, whichever way you look at it. So, also from an investor perspective, for the investors that are here, or if you know friends that are investors, is you pay no capital gains tax in Mauritius, and corporate tax is 3%. But again, you're taxed only on fund income, and the fund does not have income unless you're paying dividends. It's a tech fund, so it doesn't have dividends, but it's all capital gains. So effectively, you're paying zero tax at the fund level. And you've got the best double taxation treaties. I believe Mauritius has the most double taxation treaties of any jurisdiction in the world, if I'm not mistaken. But yeah, I mean, all pass-through structures. I'm speaking like a lawyer now, but that's certainly not. I'm not a lawyer, just
We have two questions online. If you don't mind.
Sure, yeah, of course.
So one is, how do VCs market themselves in Africa? And the other one is if these VCs are only focused on fintech.
I'll answer the second question first. And Janade, you can chime in if you like. Fintech needed to be disrupted in Africa before other sectors could take priority. So unless you could figure out how people could accept payments and pay, which is why the first few unicorns in Africa were fintechs, you couldn't disrupt education, healthcare, supply chains if people couldn't figure out wire transfers, debit, credit, mobile money. So you had to get that baseline sorted first, which is why the first successful companies were fintechs. VCs absolutely focus on multiple sectors, but fintech still accounts for between 1/3 and 40% of all the VC interest. Other sectors that are of key focus is mobility, logistics, transportation. So, I mean, in Switzerland, this may not be that relevant, but for 1.4 billion people on the African continent and LATAM, by the way, the cost of transport is often more than your cost of rent. Right? I mean, these are things that you wouldn't necessarily think living in Zurich, right? So, getting from A to B, if you're sort of just below middle class in many African cities, requires you to use a combination of buses, trains, ferries, boats, taxis, and it's a huge part of someone's day. Getting to see a doctor, you spend more time commuting to the hospital, waiting in line than the actual time you see a doctor. So the opportunity cost of unfavorable and suboptimal logistics and transportation systems is a huge concern in Latin America and Africa and many parts of South Asia just in general. So there will always be a way for technology to disrupt that. So I'd say mobility logistics is probably the second most funded sector, followed very closely by healthcare. And when I say healthcare, I mean asset light. So I'm talking, telehealth, telemedicine, electronic health records, marketplaces for medical devices, online consultations, health insurance, better, more efficient drug delivery platforms, mobile pharmacies, etc. So that's healthcare. And then number 4, education. I mean, to me, even today, slightly off topic, but the fact that we can order food online. If you want some water. Oh, thank you. I appreciate it. Thank you very much. We can order food online. We can book holidays through booking.com or Airbnb, and we can get our tickets delivered on our phones, but we still have to go to school and study Pythagoras theorem and the periodic table. I mean, to me, this is just absolutely absurd that education has not really evolved, whereas every other sector has kept in pace with basic digital change. So in a continent of 1.4 billion people, where, what was it, Janade? Like 1 billion people need to be educated over the next 20 years. Like, how are we going to create the next doctors, lawyers, engineers, architects? on the continent if we haven't fixed our education system. So a big part of our fund invests in edtech. I forgot what the second part of the question was.
Marketing. Maybe I'll just comment.
Yeah,
So
sure.
If you look at, so Zach said earlier that about 5 billion was spent last year. That was across 860 transactions of more than $1 million. And reportedly, there are about 850 investors in Africa. But that could mean they just did one deal or they've done 160 deals. So the range, we just don't know what the range is. But let's say there's 150 investors. Half of that, 55%, are actually global investors. So we're seeing a lot of, because of the fundamentals that Zach spoke about earlier, that if you are looking at it from anywhere in the world, what does the next 25 years look in my business? Given all those fundamentals of Africa as the youngest population, most arable land, and food security is an issue, climate change, where's our food going to come from, commodities that are still driving economies for many more years, and most minerals are on the African continent collectively, then you have to consider Africa as part of your strategy in the next 20 to 30 years. And so we're seeing a lot of interest in how global VC funds, especially the American funds, are now starting to invest. The Sequoias, the Tiger Globals, all of the big SoftBank, they're all there, but they just don't know how to access this very difficult market. And so either they do 1 or 2 direct deals just to learn, or they go through professional managers who really understand the environment.
Yeah.
So the marketing, I think we still have a lot of, as African investors, to do to market ourselves, but events like this helps.
Yeah.
We travel a lot within the continent and abroad. Having unicorns has certainly helped because now there's discussions. One of the African fintechs just bought an American fintech. That's been a big story. So baby steps. We're 10 years into this journey. But we can do a lot more, especially in terms of research that comes out of Africa for the rest of the world. I think we can improve on that.
Yeah, this is such a good point. Because also, if you look at Africa today from a tech perspective, we're about 5 years where Latin America was 5 years ago, maybe 7 to 8 years where India was. And, I keep making this point about Africa, despite being 54 countries, operates very similar to an India or a China. So if you just look at that, 1.4 billion people in all these 3 geographies, if I may say so, you can create significant value to investors and to your beneficiaries without having to step outside of Africa. Right? And I think that's an important point to really understand. China has the second number of total unicorns in the world, and how many of them can you name? Can anyone name me more than 2 Chinese unicorns? There are more than 100 of them because they serve the Chinese market, right? But from an investor perspective, if you can make returns, why wouldn't you look at that market, right? And in Africa, you have the same story, and you've got a lot of, the African economy is certainly a lot more open than the Chinese economy. Right. So again, it's just things to keep in mind when you look at, and these, for example, are some of the global funds. To Janade's point, a lot of them are US funds, and they typically invest at Series B and Series C and later. DST, Tiger. You guys know all these funds. I don't have to explain. SoftBank, inside Stripe. Stripe did a big acquisition of Paystack. Paystack is a big African payments company. That was a $200 million deal done just over 2 years ago. Sorry, go ahead.
And who's serving the early stage segment, like pre-seed, seed?
You're looking at that. No, I'm just kidding. Accelerators are very, in fact, there's a slide here. We have a slide for everything. This is actually research by Endeavor. Which you guys know what Endeavor is, right? Endeavor is the global impact accelerator. So, yeah, feel free to take a picture. So, this is a history of the last 7 years. the most active investors in Africa this year and last year. We did not plant this slide. This is from Endeavor, but we just happen to be over here as the most active investor in African tech. Y Combinator is the third largest investor in African tech, and that's
Do they
entirely
have a base
pre-seed.
also in Africa, or do they serve them from the US?
They serve from the US. Y Combinator is a bit arrogant. They will not open up an office in Africa. That's okay.
I think COVID, some of the online programs really
Yeah.
accelerated that, right? Because I think it was always a challenge for African entrepreneurs to go
Correct.
there and support themselves during that period.
Yeah.
And COVID, you saw in those 2 years of online cohorts. Then they now
Yeah,
it's 20%, 20 or 25% of all their cohorts are
Yeah.
African startups.
Or African startups, and YC is fully virtual. At least as of this year. They may change it next year, but as of now, they're still fully virtual. So YC, Techstars, 500 startups, Startup Bootcamp, Plug and Play, Seed Camp, all the major accelerators have significant African cohorts. And interestingly enough, across B2B and B2C. So up until today, the majority of successful African tech startups are B2B, for obvious reasons, the distribution through insurers, telcos, and banks. But you're seeing a significant number of, the vast majority of our startups are B2B or B2B2C, but we have one startup in our cohort that's almost entirely B2C. They're a digital bank called Kuda Bank. And Kuda Bank is very similar to N26. Interestingly enough, N26, Kuda Bank was modeled on Nubank in Brazil and Mexico, and N26 in Germany. Kuda Bank is 3 years old. Their growth rate in their first 3 years is faster than N26 and Nubank. And Nubank is now worth $30 billion. My previous fund, Startup Bootcamp, was the very first investor in Kuda Bank, and Launch Africa has doubled down through its fund. So what's interesting is you've got to look at unit economics as, how do you, I'm preaching to the choir here because you guys are either founders or investors. I mean, how do you maximize your lifetime value, and how do you minimize your CAC? In Africa, you can do that very effectively through corporate startup partnerships. And that's a key aspect of how we work with our founders. As early stage investors, the question you're asking, who's backing early stage companies? It's accelerators, it's angel groups. Angel groups are fantastic, but the value they add outside of their capital is limited. It's mostly just money.
I'm very curious about this actually, because you said Y Combinator sourcing and serving the companies from the US. And early stage investing is very often kind of locally bound. So you need to be in the ecosystem because the network is there, your first employees are there, your first clients are there.
Yep.
So how does Y Combinator and all the other accelerators based outside of Vertica create value for companies, early stage companies, very much inside?
Yeah, no, absolutely. So YC is a great brand because YC helps you. If you were to ask me what is the biggest benefit of going through Y Combinator, it validates your business model. YC will tell you has anyone here been through a YC interview? Within 10 minutes, they can know exactly whether or not exaggeration, maybe 50 minutes. but the reality is they understand product market fit and problem solution fit very clearly. If you're in Burkina Faso or if you're in Market Street in San Francisco, it doesn't matter. The concepts, you as an investor would know this. So YC is great from a business model validation perspective and market sizing analysis, but YC is not going to be giving you YC does $125,000 checks. It's not a lot of money. And they now have a $375,000 convertible note, but YC is not really plugging the funding gap. They're plugging a knowledge gap and a market analysis gap, right? And it's a brand, right? The majority of early stage funding in Africa is super regional VC funds, angel groups, and that's where we saw the biggest opportunity to own the market by being a Pan-African fund that is supporting companies coming out of YC, coming out of 500, coming out of Plug and Play, coming out of Founders Factory. So we can support them with institutional capital And instead of them waiting for 4 to 5 years to do a Series A, they can do a Series A in 1 to 2 years. And that's important because the problem is, I mean, there are some founders here. What percentage of your time do you spend on fundraising? Be realistic. Don't tell me it's 1 month of the year, because it's not 1 month of the year.
35%.
35%? Do you think that's 40%? I mean, should you spend 40% of your time as CEO fundraising? You shouldn't. Especially, I mean, at Series B and Series C, maybe, but not at seed. Right? So when you have sophisticated institutional investors that understand, that have the flexibility and nimbleness of an angel, but they have the gravitas and structure of a later stage fund, that's what founders need at the early stage. And that's what we're trying to do and have done relatively well through Launch Africa, right?
Just out of curiosity, because it fits quite well in that slide. I mean, you're based in Kenya, Capo Africa, the money's from Japan. Y Combinator, San Francisco. What is your gut feeling, and it's probably only gut feeling, in terms of, is Europe lagging behind in terms of, let's say, Series A plus minus investing into Africa?
Yeah, I think it's tough. It's
a tough, yeah.
Yeah, listen, I think a lot of European, so a lot of European investors do it by being LPs in funds versus doing direct, and it's understandable. There's a lot of European funding that goes into Series B and Series C funds. There's still a bit of, I mean, I'll give you a great example of one of our LPs. So one of our largest LPs is Commerz Ventures, right? Which is, and their sole LP is Commerz Bank in Frankfurt, right? Now, Commerz Ventures is run by VC guys, not bankers, to be very clear. Now, Commerz Ventures knows insurtech and fintech exceptionally well. They were lead investors in Marketa, in eToro. I mean, they have a fantastic portfolio, right? They use their product and sector knowledge to do Series B and Series C deals in Africa. So they were investors in MFS Africa, which is probably Africa's next unicorn, or on track to be Africa's next. They were the company, the fintech that bought an American fintech 2 or 3 weeks ago. Now, Commerz Ventures is a very smart, strategic CVC, corporate venture capital fund. They don't have the bandwidth to do seed deals in Africa. So they invest through a fund like us. They get line of sight into 100 plus companies, and we can tell them which ones are the best fit for them at Series B. Because when someone comes into our fund, within 12 to 18 months, you've finished your Series A. Within 2.5 years, you've done your Series B. It all depends on product market fit. There are 3 companies in our portfolio that when we back them at seed, they're now at Series B. So we provide a lot. So to your point, are European funds missing out? Yes and no. Most of them invest through funds, and some of them wait to do directs. But I think there's an opportunity for them to start doing directs a little earlier, because the valuation arbitrage gets smaller and smaller and smaller the later you go. So the average valuation at seed stage in Africa is about between $5 and $6 million pre-money. That's not a lot. I mean, in Silicon Valley, I can't remember. I mean, I lived in Silicon Valley for many years. Even 10 years ago, a seed round was starting at $8, $9, $10 million pre-money. But it's Silicon Valley. But so this is the point, right? So we're backing good companies that are coming out of accelerators that have partnerships with either telcos, banks, or insurance companies, and making sure that they can get to MRRs of $100,000 or more when they're ready for an Accel, a Sequoia, Lake Stars, and Andreessen Horowitz, etc. And that's the majority of our exits are through secondaries, right? And that's the important thing. I haven't got these slides.
Just super quick, we have people online wondering what return profiles LPs are looking at for investments on the continent. If you're able to share some benchmarks around that.
25 to 50%, pretty standard.
It's a higher risk, so you expect a higher return. Certainly in ours is 25, and I
At
think
the bare minimum.
At the bare minimum, it would be 25 and above. In the female fund we've just launched, it's 35% because you have even more of a risk factor.
Yeah. Yeah, I mean, so this is a commercial fund. I mean, impact is a very useful byproduct, I suppose. But we're not doing this. I mean, we're trying to deliberately steer away from the mentality that the only way to make returns is through impact funding, right? Because impact funding usually means that you have to also coat your cap table with non-recourse funding, which is grants, a lot of debt, and we have to move away from that mentality, right? So yeah, this is. Was there a question? No. Okay. Just for those that are interested, this is. I mean, we set out to raise $15 million in Fund 1. We were oversubscribed by 2.5x, so we closed at $36 million 2 months ago. And we've got, like I said, 230 plus LPs in our fund. We've done 116 deals. Our fund's currently sitting at an IRR mark to market of over 50%, 50. And it's because you're backing really smart founders that are able to expand. And I keep saying this again: if you're just in one market, you're not in any market. You need to expand into multiple markets. And the majority of our businesses are SaaS, so technology doesn't see borders. We don't. I'll come to you in a second. We don't work with a lot of startups that are working with governments, right? So it's either B2B or B2B2C. There's very little B2G. So we stay away. I mean, the traditional mindset, when people say the word Africa, what do you think? Ooh, it's oil and gas, it's power, it's manufacturing, it's mining, it's tenders and contracts. When you work with tech startups, it doesn't matter, right? So we'll say.
That's exactly what I wanted to ask. How did you anticipate throughout the years on the fear that is throughout the society, actually in Western countries, about political instability?
I mean, Janade was at the African Development Bank for 3 years as their chief. And how do you counter the mindset that people have about political instability in Africa, corruption?
You have wars in the north. So diversion tactics has always been a good thing. Unfortunately, Africa has a perception. Even when we do well, we still have the perception. But having perceptions elsewhere takes a little bit of that. And so what we've seen now is certainly a flow of capital from the US to Europe, because they're trying to diversify. And eventually that will filter down to more emerging markets. And so we're waiting for that. In the meantime, we do have as frontier investors, have to do the job of trying to tell the good stories. And the more there's good stories, successful exits, which is still lacking on, more unicorns, the more you see confidence. What certainly have been happening now is that global investors see technology as the only lever for us to jump the development curve in Africa, because governments have failed us, development has failed us. But they've also recognized that the mobile phone penetration and how fast digitization happens and how fast consumer behaviors change in Africa compared to the rest of the world, there must be something there. And it's a patient game. You have to give yourself time.
Yeah, it's because I lived many years in Africa, and I convince my friends and family very easily because I've been there.
Yeah.
And they trust me about my stories, and I say there's a huge opportunity, but in general society you cannot bring everyone.
No, but it's baby steps, right? So like in my previous fund, Startup Bootcamp, we had 8 investors from Zurich. You guys familiar with SICTIC, the Swiss ICT investment club? So Thomas Dubendorfer, who's HP, ex-Google, extremely smart. He's written a book recently on the angel investment network in Switzerland. So he was one of my first investors. I'm talking like 7 years ago. And they've had an incredible experience in our first fund. So there are many investors in Switzerland that have become that are LPs in many funds, but Startup Bootcamp as a fund was the Africa fund that paid back their capital and their hurdle rate in 3 years. And word spreads. Oh my God, this small fund in Africa gave us a higher IRR than all the other funds in Switzerland. So it spreads by word of mouth, right? So ultimately, there needs to be better marketing, better awareness, because success, to Janade's point, success stories of African, Latin American, and perhaps Southeast Asian startups and founders aren't reported in European media or in American media. Also, it's unfortunate that media tends to have a negative bias. Negative stories receive more clicks and likes and shares and subscriptions than positive stories, right? So, so that perception can only be changed by folks like yourself when you experience it firsthand. So I think it is a long process, but we're getting there. And seeing returns through exits, there's nothing better than seeing an actual, money in, an impact of your work. So.
Just a quick heads up. So we're a bit past 1 now. Since we started late, we can take a few more minutes. But
Yeah. I mean, we've got
we're
no
on
hard
time.
stop, but I mean, I'm sure everyone here has got things to do. So, yeah, you know what? Let's just take some questions. These are just some numbers on what our current portfolio companies are doing. I mean, as you can see, there are some companies where we are on track to make a lot of money, but not just money from an impact. Like we'll talk about Gozan quick as a case study. Maybe.
Yeah, we spoke about financial support when we spoke about the Y combination. So one thing that we want to do is for every $1 of financial support, we also want to give $1 of non-financial support, which is quite important for us, especially at the early stages, to help founders not only raise capital faster, which we've now done in 116 companies, but then what else do they need after that? And so I call it the war on talent is quite significant in Africa. Not only are you competing against global corporates, but also African corporates, and then who's going to then go work at a startup? It's going to pay you much less. So what we've now done is on the talent side is look at if we could influence finding you the best executives, so your C-suite people in your startup. So we signed in a partnership agreement with an executive search company, for example, and they've now taken the time away that founders are looking for candidates through their own networks, and we provide them with 1 or 2 of the best candidates for that role at a flat fee, so highly negotiated, for example. The second thing is we then invested in a company which is an expertise on demand. So if you're looking for, I want to expand my company to a new product set or a new region, you can have access to an expert for free for the first hour and 25% discount at future rates. With anybody, there's 10,700 experts on this platform. It's growing. We did an investment in it so that we could add value to our portfolio. Then we looked at what are processes within our startups that we can add value with. First thing is payroll. So we've invested in a company that does HR tech in Kenya. And already we did this 2 months ago, already 6 of our startups are now using their platform to do all their payroll processing systems. We have 106 companies. There's so much portfolio connectivity that we can do. Our startups can work with each other, but it also represents a lot of M&A activities between these companies to work together. I always use the example, if you take 5 of our fintechs alone in Nigeria, and you somehow did a JV between them, they would be the most comprehensive financial services organization in the entire Nigeria, because you would do everything from banking, savings and investment, asset management, lending, to insurance, and no other big corporate in Nigeria is doing that.
Yeah, such a good point. Like when you're a fund manager, you really have to understand portfolio construction. That's something, because remember, like VCs are not angels. We have to keep telling that every day to our LPs, because LPs sometimes think like angels. Oh, if it's a good deal, why aren't you doing this deal? And we have to, tell our LPs to calm the fuck down and say that we know what we're doing. And it's about, one of my favorite funds in the world that I look up to personally is Sequoia. Not because they have fantastic returns, it's important, but the way they construct their portfolio is beautiful. It's almost like a magician. They invest in companies knowing very well that that company can help this company, that can be a partner to that company, and it saves. Ultimately, the single rule that anyone has to know in VC investing is LTV CAC, right? And if you can lower that cost for all your portfolio companies, you almost become a magician and you can control who does what and when. And that's a very important thing for fund managers to be aware of. And to be able to do that early in a startup's life cycle, before they have been, excuse my French, corrupted by their own bullshit, you've won. Because it's very hard as a founder to unlearn something when you're at Series B or Series C, because then you think that you're the best thing since sliced bread and no one is ever going to change me. But if you're mentored by a good VC at the seed stage, you go through an accelerator, you're mentorable, you're coachable, and that's something that we also look for when we back companies. Sorry, we've spoken way too much, we've gone over, but yeah.
I think maybe a final question from online is, how do VCs market themselves in Africa?
How do VCs market themselves? You mean to LPs, or just an interesting question?
Can you scroll?
You know what the simple answer to that question is? It sounds a bit cocky, but our founders market ourselves better than us. Because if we add significant, to Janade's point, non-financial value to our founders will go out and say, gosh, I got a check of $200,000 from Launch Africa. But in addition to their money, they did A, B, C, D, E, and F, and G for me. If you are a founder and you're doing this, before you talk to any fund, go to this fund. I mean, let your portfolio company speak for you. I think that's the best way for a fund to market. The funds that are always on Bloomberg and WSJ and Financial Times trying to talk about how good they are usually are hiding behind some sort of insecurity. It's the same in work as it is in life, right? So if other people can talk about how good you are, then you know that you're doing something right. So either your LPs speak about how good you are, or your founders speak about how good you are. You don't have to do any marketing yourself. Sequoia doesn't have to market itself. Its LPs market themselves for them, and their founders market themselves. That's probably And we are, just as an FYI, we are on the heels of our sort of success in closing Fund 1 and the investments we made. In October, we'll be starting the process of raising Fund 2 to start doing follow-on Series A rounds in addition to seed. So we'll be raising a much bigger fund. We're targeting $250 million in Fund 2. Again, Pan-African strategy, seed, and Series A. And we're having some initial conversations with institutional investors. But the same thing, we're going to allow it, we're going to keep it open to everyone, individuals, very low minimum tickets. And we're just glad that you guys gave us an hour of your time. So, thanks for listening. Anything else? I mean, off the record, any questions you have for us, we'll happy to answer.
Also, the recording will be shared on our YouTube channel together with the slides. If you go back one slide, this is the next Lunch and Learn session. So now F10 is going into summer break. This one is on 17th of August around embedded finance. And demo day next week, where we have our early stage startups. Graduating.
Attend, people, don't bunk.
This one's going to be really cool, so sign up. Cool?
Cool.
Thank you so
Thanks,
much.
everyone. Thanks for listening.
hier für Switzerland. So
Sorry, yeah.